This is Justin AMZN for Friday, February 21st, 2020. And just zoomed out, trying to kind of frame up the move that we had on Friday. And I think it all kind of started with this picture of this triangle. We got a nice false breakdown here. And then we started to move up. We had a quick retest here, continued to move up, came right back into this downtrend channel that we kind of realized was here afterward. And this had the kind of a bit of a stair step here, multi-top sort of thing. We retraced back to that here, broke down, looked like we were going to bounce, and started doing that on Thursday. And then Friday just plummeted, took out the triangle bottom here, and just continued down. Paused and chopped around a little bit. And I added some of these uptrend lines here just to see if they would kind of catch us at all. And this one just straddled it, and then it just sunk lower. And it seems like we're headed potentially even lower. Our previous all-time high was down at like 2050, somewhere down here. I'm going to get rid of some of these lines just because we really need to kind of clean this up and have a cleaner picture to see where, things are headed potentially. So I wanted to zoom out and do this, and then also draw in another one of these to see if maybe that would give us some range, similar range, because we really did kind of step up into another range, ran into that as resistance. I wonder if we can come into one of these as support. The other support I'm seeing on the daily is we ran right into this very gently upsloping channel right here, like really closed right on it, right around 2100. Either the 21 at 2057 or the previous all-time high at 2050 and 50 cents could be a nice easy target to come back down to. That's if we get some continued selling into the week ahead. If we do zoom in on Thursday and Friday, you can see that there were some buyers coming in right here at open, looking for this to bounce, and it didn't very quickly here. So the bearish candle here is pre-market. It opened up right here, tried to run up, immediately had a bearish candle and tried to do a hammer kind of bounce, didn't move higher. And then another pretty large bearish candle down with volume saying, this candle was a little bit light on volume, breaking down, but this volume continued it lower. What's crazy is from here, we went sideways for about, 2.5 hours or so, and let the 21 catch up, put in a nice hammer here, and then just continue to roll down. Got back into the 21 right here with an evening star reversal, and that pushed down back to the same high, or the same low here. And then it rallied into the close. 20 minutes of the last 30 minutes rallied. That was about it. So did not do very much bullish. There were a couple times in here where I put in like a hammer and you think, oh, maybe it's going to bounce from here, and come all the way back up. But no, it didn't even get going that much. It wasn't holding these downtrend channels enough to say that would be a nice place to have like a clear target. It moved right past this one, and then holding on to all of this with puts all day long would have actually eaten up a lot of premium. Not all day long, but at least for 2.5 hours here would have eaten up a lot of premium and may have just been stopped out of something like that. So if we look over at the options, we'll kind of hone in on this range where it comes in the 21, just to have some pressure come in. Excuse me. Have some pressure come in here, and then we can look at the calls to see if anything could have worked out. So first with the puts, you can see we had just a lot of sideways through here. The initial open was right around $1. It's just crazy. You could have risked absolute zero with the 2100 put, not anticipating that it could really move that far. And then I think it was the 10, this range after this hammer, which I really like that hammer, and that value held as a high on the 5 minute, but all through this from, was that 10:30? Yeah, from 10:30 on through 11:15. That was relatively flat through here. So 10:30, it pulled back slightly. So this is one thing to watch for. If you get a clearly directional candle, in this case that inverted hammer, look for an entry within 30 minutes or so of that. Like, don't do anything for 20 minutes and wait till 30 minutes goes by, and then look for an entry related to that candle. So in this case, the high was 230 and the low was 164. If you can get in 2 by 1, I mean, in this case that worked. You could have even set up something to buy near the low, so like 164, maybe go 175, and 175 was still clearly in the range here. Even half an hour later, so from this candle at 10:30 to this one at 11:05, still could have gotten a nice entry there. That doesn't always work. I was actually watching, I was watching on the 3 minute. Let's see, let me get back to just this one. Maximize that, jump over to the 3 minute. I don't know what this is going to do my lines. Yeah, this is not cooperating. Hang on. That's not what I wanted to do. Yeah, sorry. Okay, 3 minute. Couple things I saw in here as the day was going. Sorry, it's kind of hard to see. Zoomed out that far. And it's even hard to point them out. Okay. I was trying to show this to someone else during the day, and they were having a hard time seeing it. So let me draw exactly what I'm seeing. I'm seeing that gap, and I'm seeing that gap on a 3 minute. And those were really strong indications to me that we're going to have a continued bearish move. I've seen this kind of gap before. It's really small, almost insignificant. But seeing it at basically the same level here, and again, basically the same level, so told me that there's some sellers coming in here, and they're going to continue pushing it out. Now, in this case, it did actually bump a little bit higher, even this high from this level. And I don't have enough historical data or back testing or anything to show that it's going to continue. You've got some gaps in here on the 3 minute that maybe you just wouldn't expect. So a 3 minute that has that kind of gap down from bearish candle, something similar with the bullish candle. I mean, that's a bullish gap, and then it just goes lower from there. This is a bearish gap that continues lower. This is a bearish gap that goes sideways, following one that went lower. I think it's, again, looking back at the 5 minute, it's probably a cleaner, well, definitely a cleaner setup to have the 21 coming in here and holding resistance, and looking to get in off of something like that. Now, you could have waited to get in as this low is broken through here. So maybe after this candle 11, so maybe 11:15. Let's go back to the put to see at 11:15, what was it doing? 11:15. So the high was 238, the low was 203. You could probably do a setup like 250 by 150 and would have been filled in the next candle, but also could have been filled over here. The low over here was 230. So again, you don't have to be in a rush in some of these, especially when it has this kind of an open where it, in the first, 20 minutes is seriously lower. It needs to rest, needs to digest that, and needs to trap more bulls getting in. But it did start to roll over. gave you, I think, a retest right at noon. Is that the noon level? Yeah, 12:05 Central. So the value here was about the same as here, and then it just collapsed. And if you didn't have this line here, where would you have been looking to let this ride down to? Probably 2100 would have been a nice round number, even though it lines right up with this line. It's, if you don't have a line like this in here, or didn't draw it in like I've got, I mean, it moved from about 2150 right before pre-market, right under that. Really started to collapse right before the market opened, retraced up to 2144.55 is the high. So, going from, really 2135 here at open down by 35 points. I mean, that's a nice move. And it pushed even past that a little bit. Over $50 move, overall the range today. I think it was 56.55. That's what it was. So some good opportunities bearish. That's kind of the point. And give you some opportunities to, catch a bigger move like this, and then for it also retest and came back into some of these highs. Now this would have been a little bit more of a challenge to be trading this. I give you a really nice evening star reversal here. Really nice, and again, kind of an inverted hammer candle right at the 21 exponential moving averages. That was 155. So following the 155 candle right here, 5x4 would have been a bit tight. That's $100 risk, but I'd rather have that, straddling this candle. So, getting in above, 575 by 375, I guess that's $2. So I'd probably go out further, since this one's already at the money. Probably go out to 2095 or 2090 and see what could happen there. But in some of these, you just got to move quickly. Let's look at 2090 to see what that was doing in here. Shouldn't have had as big of a move, but yeah, there's something. Okay. Yeah, there you go. So the range on this is $57, 155. So you're into that 2x1, and you're just flipping it out either the next 5-minute candle at 3 or holding for 2R up here. And that would have been more of a hope trade that it's going to move that much. And then if we take a look over at the calls, when it came into some of these lows in here, you could have been buying calls. Now you're going counter trends. You just want to, scalp an R or half an R or something. And this is the 2100 call. So this is more expensive earlier in the day. Down here, it really didn't move too much. Moved from 50 to 1, maybe. So that would have been tougher to do. And let's see. If we do like 2125, maybe. We get a little more movement here. So yeah, so it puts in a low of 4, comes down, puts a nice hammer. The range on this was $1, so you're already there. So 4x3 and flip that out at 5, or even, I guess it even moved up to 6. So a quick trade where it's just going to chop around and you're just playing, a nice candle and entering at a similar level that it already came into. This is going off the assumption that it moved too far too fast, which is always, always a challenge to get that right, because you don't want to catch a falling knife. And I was reminded of that today when I dropped a knife and didn't catch it. Anyway, let's see if we look at the 2090 call. I think that stayed in the money. I guess we were at the money at one point. Yeah, so that came in. It was 128 as the low there. So again, doing something like, well, this was a much bigger range. This was a harder one to do because that stayed at the money. I wonder if the 2095. Ooh, the earlier volume was horrible. But then as it got closer to it, the volume started to spike. So the range on these are smaller. So getting in like 2x1, 2x1, and it moved up to 3, then just about to 4. Yeah. So 2x1, that had a quick move. This, these trading at the end of the day, you really want to be on like a 1 minute or 2 minute chart to trade something like this, just because you need to really be evaluating kind of how it's moving. So yeah, I'm down on a 1 minute, doesn't quite make it down to 101. Yeah, it's starting to bounce, double bottom here, still got an entry. 201 probably would have been looking to get filled a little lower than 2. If the neckline is 175 or 180, set an entry out there 175 and a stop at 1, and expect slippage on something like this. And then yeah, flipped it out at 3, or maybe held till 4. That if you're, you need to be watching these, but if you're looking at it and it's getting up to 3, just get out there, or you can hold a little bit and you can move a stop up, or be ready to sell it at 250 or 150 or whatever on its way back to. It can quickly turn around, like this kind of a move here where it just plummeted. This can happen so quick. We're on a 1 minute. This kind of thing can happen so quickly right into the close. But this is something I'm getting better at, trading right into expiration using options that are expiring in a few minutes, because it's all intrinsic value at this point. Basically, the move you're going to get is not getting extrinsic value back into it. It's just wherever the option's at. If it's at the money, it's going to cost that amount, and looking to do those with absolute zero is the way to go. So we'll go back to 2100 right into the close. So this moved from about 50 up to 1, and so it went flat through here, just going around about 40 to 50, actually around 30 to 50, and then had a bit of a rally up to 1. And I actually traded this. I got in for 40. What was it? 245. Okay, I was in at 40 and I was out at 80. I got a quick double on the option. Just real quick, just scalping something that was, I'm not ready to play like the last 5 minute, but I was looking to play the last 30 minutes somewhere in here, and just saw, hey, it's kind of hovering in here. I'm just going to get in, and absolute zero, I'll lose, and I'll learn from this. And it's a really easy way to look for ways to get, actually, let's see, I think it was in for 40. Sorry, I think it was actually filled at 250. No, 250, 255. No, there's no way. Okay, I was only in for a few minutes, and that's what was crazy. Is I doubled on an option in just a couple of minutes. Now again, it's risky to do this. You want to know exactly what you're risking and be watching it and that kind of thing. But I'm risking less than an R to see if I can just evaluate my own emotions, evaluate my mental status, and see if I can just set something up that expecting, anticipating that it's going to have some sort of move, right into the close. And when it came down here and then started to bounce, that's when I'm like, I'm going for this. It started to move up, and it's like, if it moves up and keeps going up, that'll be great, because it'll be in the money and I'll just exit, and it'll actually have an actual intrinsic value. In this case, I got out on its way up, which is not something you want to play around with. On its way back towards at the money is when I exited. I wasn't waiting for it to hit 1 or something. I'm just going to get into this, get out, and learn from it, which is always good. So yeah, we'll keep an eye on things this week, see if we get a continued move lower. We are very high. This completes actually a double top with a neckline right in here at like 21.25 or so. So very possible that we get some sort of retracement and then continue lower. We have a first histogram bar of um, losing momentum. We haven't had one of those after a squeeze. I mean, that one doesn't, can't even see. I guess this was a squeeze and went bullish, went sideways before it collapsed. So we can go sideways up here a little longer. Look like we're going to bounce, get some more bulls in here, and then break down even more. We're still really high compared to, you know, the range that we were holding. I mean, this range, sorry, through here, we were holding for such a long time, broke out through here, did a quick retest. I mean, this was a quick retest. This was kind of a secondary retest. I don't anticipate that we're going to come all the way back down to that. I mean, we could come back down to this level over the next few weeks if we have a lot more bearishness come in. Otherwise, I mean, this gap is such a strong bullish gap here that I really want it to hold, but, you know, I'm not going to go against really what I'm seeing in the chart. So right now I'm anticipating this going lower, but if we get any sort of gap up, you know, from the close, look for it to run up a bit and really form a retest, and then we'll go from there. So that's what I got. Hope this helps. This is just AMZN.